Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario, where we're looking for a 5-wave structure to the upside to eventually finish a higher time frame wave 1, for then a 3-wave corrective structure to the downside, and then continuation for higher prices to come. In this scenario, wave 3 currently went all the way to the 3.618, which is fine for a wave 3 because a wave 3 can extend to much higher prices. The 1.618 is usually a minimum target for a wave 3, and we did have a little bit of resistance, so it was nicely respected. Then pushing up to the 2.618, which is very common if you pass the 1.618, bit of resistance as well, but eventually ranging on top of the 2.618, probabilities increasing for the 3.618. If we pass the 3.618, in other words, if we're going to take this high, probabilities increase to go to the 4.618 over here, which is a very important level, as that is also a golden target box over here, which is sitting between 38.5 and 39k. And one of the amazing confluences in that area is the point of control of the multi-year range of basically 2020 to 2022. It is this whole range over here, which is in confluence with the 4.618. So that is quite incredible resistance indeed in that particular area. Now, at a given moment, we are then looking for a wave 4 retracement like we see in green over here. So once the high of 3 is in, looking for 4, most common target for a wave 4 between the 0.5 and the 236, currently between 33.8 and 31.3k, with the invalidation being 30.1k. But the higher this will go, the higher we move the boxes of this wave 4 to the upside as well, as we just move the fips with the potential high of a wave 3 to the upside. Now, when we look at this wave 3 internally, I like to highlight this topic over here, because if we look at the beginning of this move to the upside, one can argue it's like a 1-2-1-2, where you could have a 4-5, potentially a 4-5. Now, if this is a finished wave 4, and we go to the lower time frames in a second for then continuation in another wave 5, of course, this little move is a lot shorter than this horizontal structure. However, this little move is a higher degree Elliott wave count compared to this horizontal structure over here. However, it is possible that a higher degree Elliott wave structure in a wave 4 is shorter in time than the higher degree Elliott wave 4, and that is because of the shape of a wave 4. You can have a complex WXY sideways double combo complex wave 4 structure like we had over here, for example. And then you have also the zigzags 535, which is much shorter, or even double zigzags, which is a WXY, but then it is a zigzag X zigzag. And these also tend to be shorter in time. So if the lower degree Elliott wave count is a complex sideways structure taking a lot of time, and the higher degree Elliott wave count is a more simple or sharp structure, then the higher degree Elliott wave 4 can be shorter in time than the lower degree Elliott wave 4, which might be the case over here if we get that continuation to the upside for a wave 3, then potentially ending around that 4.618. In the bearish scenario, we also still expect a move towards the upside. Here we're looking for an ABC to the upside, where wave A is an expanding diagonal, which is rare, not preferred at all. Wave B hit the 0.382, which is a common target for B. And then we're looking for a 5-wave structure to the upside in the wave C. Now, preferably in this scenario, this is then your 1, 2, 3, 4, and preferably this was going to be your wave 5. The problem is that after an ABC, you're going to be looking for an impulsive continuation to the downside for much lower prices to come. The problem is that from this high to the downside, this move over here, you can't count an impulsive structure. All the impulsive structures here are basically invalidated, which I'll highlight in a second as well, which really lowers the probabilities that this is your 5, this is your 4, and you're now going to go to much, much lower prices to come. But therefore, it increases probabilities that your 5 still needs another high. Potentially, your 4 is in, or you're going to get a deeper 4. But by all means, this wave 4 is going to become quite long compared to your wave 2. Now, rule of alternation says 2 short, 4 long. That's true. But 4 most commonly does not pass the 3 or 4 fib time of wave 2. So basically being 3 to 4 times bigger in time than wave 2. So this lowers the probabilities here of a potential wave C and then bearish continuation for much lower prices to come. If we then zoom in to the lower time frames and actually first go through the bearish scenarios, right? before I go into the bullish scenarios, just to show that they don't look good. Then here we have an impulse to the downside, 1, 2, 3, 4, 5, and then a wave 1 looking for 2, bearish continuation in the downside in a wave 3, overlap between wave 4 and 1 invalidates a impulse over here, and also wave 4 retrace to the golden pocket, which also invalidates it. So yeah, this does look very, very unlikely indeed. Potential 1, 2, 1, 2, 1, 2 is also already invalidated because this high is taken over here. And then finally we have a diagonal which is expanding, which is rare first of all, but also besides that, this wave 3 is longer than wave 1, so that is why you have to think about an expanding diagonal, but then wave 5 is shorter than wave 3, which is not allowed, and therefore really lowers the probabilities of this scenario as well. So now that being said, let's go through the bearish scenarios and the bullish scenarios. This, like the new bearish scenarios, is basically a sideways structure before continuation, right? All of these scenarios will lead to continuation to eventually take the high. That is the difference here between the scenarios just showed and these ones. Now, in this particular scenario, we're looking for a WXY sideways double combo. W being a zigzag, eventually looking for X to finish, and then Y either being a flat structure or a bigger triangle structure. In this particular scenario, inside this wave X, we are then looking for a W zigzag, wave X also being a zigzag in an ABC, where wave C went to the 0.618, which is a target for C, not so common, but it is a target nonetheless. And then a 1, 2, 3, 4, 5 A, 3 wave B, 5 waves in C. For then another A, B, and then a wave C to the upside, where this wave B is also a complex structure in a W, X, and then a Y for continuation to the upside, and then a wave C. Now, when we look at these fibs over here, if you take the fibs from the low to the high of A to the low of B, then the most common target for your wave C in white here is going to be between the 1 and the 1.236, which is between 35.4K and 35.6K. Also in confluence with the target box that we have over here. And one of the confluences in the target box is the daily, which is right on top of the 1-to-1, sitting at 35.4K. So that is a nice additional confluence at the 1-to-1. Arguably, you can take the fibs from the low to the high of A to the lowest point in this wave B. And if you do that, then what you then get is that we are already inside this area now, which you can see over here, right? So we're already inside the 1 to the 1.236 area, also in confluence with this target box. But I just wanted to let you know that we do have the daily up here. It's interesting confluence, and if price moves up, it can still become a wave C. Right. If we look at these sub waves of this wave C, though, potentially 1, 2, 3, 4, 5 could be the end, right? However, you can also see this little blip here, and then a 1, 2, 1, 2, 3, 4, 5, 4, 5 hit the daily, and then you want to see a rejection. So in general, this target box, as mentioned yesterday and days before, is always going to be an area of interest for potential short setups. Of course, if you see proof of resistance, you want to see weakness. Bearish CVD, RSI, stochastic, moving averages, whatever you like to use, market structure changes, candlestick patterns. You want something to eventually go against the little local trend over here. Now, in the bullish scenario, you're going to be looking for continuation. So in this particular scenario, we then have over here a wave W in an ABC, wave X over here being a zigzag as well, and then a Y in an ABC as well. But this is a sharp WXY, not a sideways. So this is also called a double zigzag, and then a zigzag W, X, zigzag in wave Y, finished. In this particular scenario, we are then looking for a wave 1, and now the WXY is not a B, but a wave 2, for then continuation in a bigger wave 3 to the upside. Now, a wave 3 internally also again starts with a wave 1 and a wave 2. So inside this wave 3, we have the wide count being 1, 2, 3, 4, 5 to finish 3. In this particular scenario then, we are looking for the end of a wave 1, also again around this target box, for then a wave 2 to the downside, so also a bit of a rejection, but then continuation to the upside. And this is also important that, you know, first of all, we want to first look for proof of resistance, but then we want to see proof of potential support here as well, or signs that price might continue towards the upside. We do have additional support here, 34.7 to 34.8k, which is always interesting. But of course, we would then be looking for also bullish signs here, bullish CVD divergences, higher low in price, lower low in CVD and RSI and all that stuff, right? Because the moment you're gonna get bullish signs below resistance over here when price moves to the upside, for example here you get bullish signs, you can look for the daily. If we then get a rejection but you get more bullish signs, then continuation increases, and we could be looking for an impulse to the upside in a wave 3 to look for the gold target box eventually at about 38.4 to 38.8k, right? Bullish continuation to the upside, after which we then expect a bigger rejection to the downside to also take the lows that we have over here, because there's a lot of liquidity at these lows as well over here. As you can see, right, we've been talking about it, but then price will first move up before you get the bigger move down to take all this liquidity. So that is definitely something to keep in mind, because the bearish scenario being a potential A, B, C is based on this structure, not something that I am looking for anymore. If we then look at the CVD divergences, we had constant bullish CVD divergences, but all of these already played out, because this high has been taken, this high has been taken more locally over here as well after the stream. This high got taken, played out, and then overnight, price moving to the upside, getting a rejection, higher low in price, lower low on the CVD, bullish CVD divergence, which you can see over here, higher low in price, lower low on the yellow CVD, bullish CVD divergence, also played out because price took this high over here. And now at the moment, we hit the target box, but as you can see, CVD is very neutral over here. Price moves down, CVD moving down, price moving up, CVD moving up. There's nothing going on here at the moment, so we have to wait and see what happens over here. And if we then finally look at the probabilities of the different scenarios, then based on the micro count over here that we've done, especially with this move to the downside, which does not look like an impulsive structure to the downside for much lower prices, it therefore increases the probabilities on the micro to look for this high eventually and the trend to continue towards the upside in either a three-wave structure WXY or the continuation. Therefore, we have to keep a close eye on what is happening at the resistance area, because price is currently, of course, at resistance. And also, if we zoom out, we are still looking for continuation to the upside as well to continue the trend to higher prices, where we are going to keep an eye eventually on that gold target box over here, which is again sitting between 38.5k and 39k. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.